Hey everyone, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, May 7th, 2022, and this podcast today is my weekend update. What we do is we take a look at the trades that I entered last week. We talk about when I bought them, why I bought them, how I'm managing them moving forward, either to the upside or to the downside, what trades I got in, what trades I got out. And after that, we are going to go down through the stocks that I've selected. I've gone down through my watch list and I'm looking at some potential levels for next week. And hopefully that's helpful for you to understand how I look at these levels, how I play off of them, how I position size, where my emergency stops are, end of day stops. And so I hope this is being helpful for you. Boy, we had a crazy week last week again. I'm sure, as you know, if you've been following the market has obviously been in a massive downtrend. We had a relief rally after the Fed came out and discussed what they were doing with interest rates on Wednesday. And then Thursday gave it all back plus more. Just intense day, one of the most intense days I've ever seen in the markets. And then Friday, down again. So it's been a very difficult and tough environment for swing trading, unless you're swing trading to the short side. But just want to remind you that we have gone down. We've gone down a significant amount. There will be a level that will hold at some point. Hopefully we'll swing back up. Just don't know when it's going to happen. Obviously, I wish I did, but I don't. But, I've been trading for 25 years and I have seen these kind of markets, and it can certainly get uglier from here. But we also are getting to some pretty key levels right now in the indexes and other stocks that we'll see whether these levels hold. But the important part here is you don't know anytime if a level is going to hold. You just have to position size correctly, look for your confluences of indicators, know your emergency stops, end of day stops, profit targets, all that kind of stuff. You have to have a plan because you don't know if the plan is going to work. You just have to come up with a plan, though. It's very, very important. So hopefully this podcast will help you. All my swing trades this week were not good, but that's part of being a trader. You don't know if they're going to be good or they're not going to be good. But I still get in there, take the chance on the trade, because if you have a trade that rallies for a week, 2 weeks, 3 weeks, taking a little loss to begin with, not that big of a deal compared to what you could potentially make if you're right. So it's very difficult. I hope everyone is staying safe out there. I really hope you're position sizing because this volatility is intense. I'll talk a little bit more about position sizing when we get into it. All right, so that's what we're going to do. We're going to look at the daily and weekly trades that I entered on Friday. All the rest of the trades I've had, we're losing trades, swing trading on the daily. I didn't have any weeklies or monthlies. And by the way, just to point out, I do like to take trades on daily, weekly, monthly trades. I feel like it evens out your equity curve. I feel like trading different time frames is a real advantage. I also day trade all day long as well with my trading partner, Ava. And thank God for that, to be honest with you. She and I had a record day trading day on Friday. So something kind of important to note. And I was very proud of her and I on Friday having such a good day and having a record. But it just kind of proves my point that trading on different time frames can be helpful. I didn't have any weekly trades other than the one I got in on Friday. But the daily trades were all bad, but the day trading was good. So I like to diversify my trades over different time frames. It's very rare for me, at least, that none of them work. And the day trading, the record day trading on Friday really helped mitigate the losses on the swing trades that I had on the daily. So something that I would recommend, trading as many different time frames as possible. In addition to that, trading as many different strategies as possible for the same reason. Maybe one strategy is going to work, the others don't, but you'll find one that does. And then trading as many different types of equities as possible, getting outside of equities, going to gold, bonds, silver, things like that for the same reason. So after that, we're going to talk a little bit about trader psychology. As you know, it's very important, especially in this kind of market. And hopefully by me spending a few minutes talking about this, hopefully you'll hear something that will help you. That's why I do it. And then I have a trading poem from my friend Frank. I think it's a great poem. I always like to share that. We'll just spend a couple minutes there. Then I've already gone through my watch list, gone down through all the stocks, marked 17 different ones that have potential for next week. And so we'll go through those and I'll tell you what I'm looking for and how I'm going to evaluate those trades and what I need to get into the trade. And usually it has to go higher or lower for me to do that. And it's still the case this week. So we'll go through and do that. But before we get started with everything, I have to run the U.S. legal disclaimer. It's about 40 seconds. So hang tight for about 40 seconds and I'll be back and we'll get started. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, here we go. Let's get started. I have the open trades first, and then we'll go through the closed trades after that, okay? So first on deck, Tesla. I did buy Tesla on Friday with the following signals. We had an intraday rejection of the 250-day moving average right here. During the day, it went below it, closed back above it. My end of day stop is going to just be a close below the 250-day moving average. In addition to that, it did take out the previous day's low, rally back up. I like that. Just going to go through here and show you. I talk a lot about position sizing for volatility. So let me explain this again. What you first have to do is you first have to take a look at your total account equity. Let's just say for this example, it's $50,000. Now, a good rule of thumb, when the way that I trade, you take 1% of whatever your capital is, right? Let's just say it's 50,000. 1% of that is $500. So that's the maximum allowed that I'm going to lose on any one trade based upon where my emergency stop is. Most of the time, it could gap through there, but it's very unlikely. But big picture, that usually holds. That's why I use that level. That's 2 standard deviations away from where I entered the trade. So first, what is your account balance? Number 2, how much of that account balance are you willing to risk in the worst case scenario if your emergency stop gets hit? Well, 1% is a good rule of thumb. I don't use 1%. It's a little large for me. I use 0.5% of my capital for my maximum allowed loss. Now, the maximum allowed loss, generally, you're only going to hit about 5% of the time. 95% of the time, if you do take a loss, it will not be your emergency stop. It will be your end of day stop. But in worst case scenario, if it all hits the fan, I want to know exactly what my maximum allowed loss is. And 1% is a good rule of thumb. If you're dealing with a larger account, feel more comfortable, you can trade 2%. I know people that trade 2%, 3%, but of course there's pluses and minuses, right? Your drawdown, when you make money, you're going to make more money, but when you lose money, you're going to lose more money, and all kind of the negative effects, emotional effects that come around with that. So, after all these years of trading, 0.5% is what I use for my maximum allowed loss. All right. So let's just go through and do the numbers here. Here's Tesla. Again, I bought it because of the rejection of the 250-day moving intraday rejection of the 250-day moving average. I also bought it because of the rejection of the previous day's low. So this is what I went through. We're going to use that hypothetical $50,000. 1% of that's 500. So on this particular trade, I would take 500. Then I would divide it by the value of the 2 ATR. That's right here on my chart. A lot of charts out there, you can't program for 2 ATR, but they will give you 1 ATR, whatever that reading is, and you just times it by 2 to get your 2 ATRs. But my platform does it for me. So I take my maximum allowed loss, I divide it by the value of the 2 ATR, divided by 116.64. It's going to tell me to buy 4.2 shares, right, in this hypothetical situation. Now, if you buy 4 shares and it goes $16.64 to the downside, that's going to get you your $500. Does that make sense? And that's why I have the line down here, this pink line or whatever it is down here. That is exactly 2 ATRs below my entry. If it ever got there, I sell immediately. Most of my trades, I wait till the end of the day to make my buying and selling decisions, because end of day trades, in my opinion, are the best way to go. You have the large financial institutions, they come to life at the end of the day. I feel like they're dealing with the best information. They're dealing with the most money, certainly, best technology, and what they're doing at the end of the day is important to me, and I think it gives you an edge following what the end of day trades are. So, but I bring that up because if it does get there in the morning, I'm still going to sell it because I lost my maximum allowed loss, which was 500. That's all I wanted to lose. That's all I said. Okay, this is the worst case scenario. At some point, I have to say that enough's enough. I would not wait till the end of the day. If it ever gets there at any certain point during the day, I get out. Now, so that's my emergency stop. My end of day stop is simply a close below the 250. So if it just closes 1 penny below on Monday, I will get out, take a small loss. Hopefully it goes up, right? But we'll see. But so emergency stops, 2 ATRs below my entry point. End of day stop is the reason I got in the trade. The reason if it untriggers, the trigger that got me into the trade was the rejection of the 250 and close back above, because now I have it as support. I want that as support below me, not resistance above me. Orange line up here is my trailing stop level. Whenever I enter a trade and it moves 1.5 ATRs from entry, the 1.5 is right here, 87.48. If it moves 1.5 from entry, then I go into what's called trailing stop mode. Then if I get a close below the previous day's low, I sell half of my position. I'm not going to wait for it to go all the way back down here, because if it moves up nicely and then has a reversal, it's a bit of a red flag, and I want to take some precautionary measures. So, all right, so I took 1% of the hypothetical account, $500, 1% of that, I'm sorry, $50,000, 1% of that is 500. I took 500, I've divided by the value of the 2 ATR. That told me how many shares to buy. Then I placed my emergency stop exactly 2 ATRs below my entry. I have to be aware of where my daily stop is, close below 250. And then I also put my trailing stop level up here if it gets there. But I'm always concerned about risk first. If you concentrate on risk and mitigating risk, that's when you make money. I don't know how to explain it. It's just what it is. That's just how it works. But if you concentrate on just being greedy and making money and disregarding risk, that's when you're going to get into trouble. So that's Tesla. This is a real trade. Bought this on Friday at 869.01. End of day stop, close below 250. Emergency stop down here at 752.37, and trailing stop level up here. So we shall see what happens. In addition to that, I always sell 10% of my position size whenever it moves 0.45 ATRs entry from my, 0.45 value above my entry. I would sell 10. So you can see here, the average true range, 0.45 of an average true range is 26.25. So I will take the closing price, add 26.25 to it. That will be my first profit target. I'll take my first profit target, add the 0.45 value to that. That gives me my second. I take my second, add the 0.45 value to that. That gives me my third. And then I put a limit order in to sell 10% at the first profit target, limited at the second, limited at the third. If it moves up on Monday and hits 2 profit targets, how much have I taken off? Well, I've taken off 20% of the position, right? And I like to play offense and defense with my trades. Of course, we talked about the stops, the emergency stops, the end of day stops. That's the defense. But the offense and the trailing stops are as well. But the offense is selling into strength. And, you know, I learned this from Dr. Alexander Elder, and I really like it. I really feel like it's important to take profits off when they're available. Not the entire position, just a portion. Okay, so that is Tesla. I haven't put the lines here for my limit orders, 10% limit orders to the upside, but I just take the closing price, add the 0.45 to it. That gives me profit target number 1. I take profit target number 1, add this to it again. That gives me profit target number 2. Add it to it again, gives me profit target number 3. And if it does move up and I take 20% off, 30%, 40% off, and then if it comes crashing down again, which in this market certainly possible, you know, I've reduced my risk because I've taken portion of the profit, portion off at profitable levels, And if it gives it back, then I have fewer shares. All right. So that is Tesla. We shall see what happens. Another thing to note here on Tesla is that we did reject the 250 back on the 28th of April. It respected that level. On May 2nd, it also rejected that level and respected that level. And here we are back there again. Now, is it going to hold this time? I have no idea, right? I hope it does, obviously. But if it doesn't, I'll just get out. I can get it back in at the 300-day moving average again below. So we'll see what happens. So that is Tesla, long Tesla last Friday. Nike. Okay, so I did take a weekly trade on Nike. And I like this setup. I took this on Friday. And what are the signals for this trade? Well, we rejected the 200-day moving average on the weekly. We came back down, tagged it, actually, so it's more of a bounce. And we also bounced and rejected the negative third ATR channel. And why is that important? Because the negative third ATR channel does tend to hold about 92% of prices to the downside and to the upside. Doesn't mean if it gets there, it has to bounce. But 92% of the time, it stops going down, goes sideways, or goes up, right? 8% of the time, it continues down, and it might do that. It might do that again, especially in this market. So I did exactly what I did on Tesla. I position size correctly using the 2 ATR. I placed my emergency stop all the way down here. And how far is that down below my entry? Exactly the value of 2 ATR, right? Where's my end of day stop? My end of day stop is this is a weekly trade. My end of week stop is going to just be a close below the 200-day moving average. So if it closes below the 200 on Monday, am I going to get out? No, because weekly bars close on Friday, right? If it gets down to here, I don't care if it's Monday, I'm getting out because I will have hit my emergency loss. So entry price, position size, taking my maximum allowed loss divided by the value of the 2 ATR. Emergency stop here, end of day stop, close below the 200 week moving average, and then the trailing stop level up here, 1.5, $14.62 above my entry. Then I go into trailing stop mode. So even on these trades here, basically. And so that's it. So, last week was brutal, but I did have quite a few. I had a handful of trades. They didn't work out in this market, but the market was so bad on Thursday that luckily I didn't take any trades for Friday because we were down again. So, all right. So let's go through on Pfizer. All right. This is strange. I've never had this happen in my live stream podcast or in any podcast actually, but I took 2 trades last week on, you know what? Oh yeah, no, that's right. Okay, first trade, I took all the way back on the 25th of April. I had a bullish engulfing bar, I had a V1, I had a close under, close over the 200-day moving average. I bought it at 48.95. Position size, emergency stops, all that kind of stuff. Next day, moved up nicely. I hit 2 profit targets. So how much did I take off? I took off 20% into that strength, and it gave it all back. So was I glad that I sold it? I sure was. Next day, went up again, gave me another profit target. Grateful for that. Next day went up again. Can't remember if I hit 1 or 2 on this. So, let's just say it was 1, 2, 3, 4. So I took 40% of this trade off to the upside at profitable levels. Then it came down, held to 200. So I held. And then here we closed below the 200-day moving average and I had to get out. So was it a profitable trade? It was not a profitable trade. But the trade was the loss was mitigated because of the intraday profit targets that I keep talking about, right? So here we go. V1 closed back over the 200-day moving average, moved up, profit targets, came back down, and then here it closed below my entry. Below my end of day stop, which was a close below the 200. If it closes below the 200, it's a bit of a bad sign, so I got out. All right, then we had earnings. And earnings were coming up as well. Then we had earnings. I got in after earnings. I got into Pfizer again. Why? With the close under, close back over the 200. Got in here at 49.41 position size, end of day stops, emergency stops, all that kind of stuff. Next day went up, did not hit a profit target, did not move high enough. Thursday, of course, we had the big down day where it closed back below my entry the 200. So 2 losing trades on Pfizer. And, I do want to point out here that I know it's difficult. It's not intuitive. It's kind of counterintuitive to if you have a trade on a stock and you lose and you have another legitimate reentry, it's kind of hard to get back in. You're like, oh, I just lost money, but do I want to lose money again? If it's a legitimate signal, it's the same stock, I always do it. I have no issue with that, but this one didn't work as well. So Friday, it bounced. It was actually up, which is pretty interesting on a day like that, but you see it closed below the 200 as well. So out of Pfizer here for a 1.77% loss on this trade, and then on the first trade, it was a loss of 1.27%. So the first trade was a loss of 1.27. Second trade was a loss of 1.77. So out of Pfizer for now. TLT, bonds, my gosh. Well, this is a good example here, everyone, of it's never fun to take a stop loss, but it's sure nice when you take a stop loss and it keeps going down. I did buy TLT back here with an under 30 over 30 here at 120.61, moved sideways the next day, moved up, took a profit target, moved up again, thankfully took another profit target. We moved back down, we moved back down, we moved back down, and I had to exit the trade here because it closed back under 30 RSI. The reason I took the trade was it closed under, it closed back over on this intraday bar. But if I take an under 30 over 30, where do I get out if it untriggers the 30? And here on the 2nd of May, it closed below. And I got out, followed my stop. Then it rallied. I was like, oh, shoot. And then down, down, down. So thank goodness I didn't think to myself, well, it can't go any lower, because it certainly went lower. All right, McDonald's. This one was a frustrating one, everyone. I bought McDonald's here with this intraday rejection of the 200-day moving average. I bought it at 246.88. Nice intraday rejection and closed back over. Next day, opened, went up, and then barely closed below the 200-day moving average. Am I supposed to get out? Yes, I am. Next day, went roaring up. Frustrating, right? There are going to be so many times where you take a trade, you follow your rules, you do what you're supposed to do, you get stopped out, and it's going to reverse right back up higher. I'm sorry, I don't know what to tell you. It's just part of trading. But if it would have kept going down and down and down like bonds, right, then all of a sudden I'm happy that I got out. But as it turns out, I got in at 246.88, got out at 245.80. It was a small loss, 0.48% loss. That wasn't the issue. The issue was the next day it went roaring up without me. And of course, your natural instincts to go, oh man, I should have stayed in. But no, I shouldn't have stayed in because I was following my rules, right? Had this not closed below the 200, I would still be in the trade because it is still holding 200. So anyway, McDonald's, a loss of 0.48%. And then lastly, Amazon. Boy, this one was not a fun one. I did buy Amazon here on the 4th of May. I had an under 30, over 30, and a V1. Good signal, position sized. Got in here at 25.16 with the under over 30. Next day, had a huge day down. I can't remember how much that was. Well, let's just take a look and see. 7.56%. Yep, big day down. That was on Thursday, and I had to get out for an 8.02% loss. Now, you see my emergency stop down here. Got pretty close to it, right? Did not take the full loss on the trade because it didn't get to my emergency stop, and the end of the day stop kicked in here. But I remember my trading partner said, whoa, Amazon, is it to your emergency stop yet? And I said, no, not yet. Getting close, but not yet. So I did exit at the end because it closed under the 30 RSI. But really what I want to point out to you here is this emergency stop. Had this triggered 5 minutes into the market open, it would have hit my emergency stop. And what do I do with my emergency stop? I have to get out immediately. So loss of 8.02%. That was a big one. And that is it. So what I have, so I lost money twice on Pfizer, lost money once on TLT, lost a little bit of money here on McDonald's, 0.48%, and then a big loss on Amazon here. Tough. It's been tough. swing trading to the long side has been extremely, extremely tough. But like I said, there will be a point where we catch a bottom, we swing back up. I don't know when. I just don't know when, but I wish I did. And all I can do, and that's why I'm a technical trader, I trade off the technicals. All right, and then only current positions right now, Tesla, intraday rejection of the 250, and Nike on the weekly trade with the rejection of the 200, the negative third ATR channel. All right, so I talked a little bit about trader psychology. Oh, let me grab a drink real quick. I talked about trader psychology, how important it is. Markets like this, your emotions get amplified. People get in there, tend to revenge trade. I've done it too, my friends. I really have. I've been trading for 25 years and I've done it more than I should have. But I'm telling you, don't do it. It does not work. And as a matter of fact, actually, let me switch over to this one because I have two trader psychology posts today. Because I thought it was so important. But I found this one here from Rushi Karia at QuantRK over on Twitter. Please go follow him. He always posts good things about trader psychology. And I read this. I said, oh, this is so apropos, to what's going on right now. But let's see what he has to say. It is not removing emotions from your trading, but understanding your emotions and acting in a manner that includes them. So you hear a lot of people talk about removing emotions from your trading. Yeah, good luck with that, right? We're all human. I think we're all going to have emotions. Having emotions about your trading, there's nothing wrong with that in my opinion. But what you do with those emotions, that is what's important. So Rishi says it is not removing emotions from your trading because it's impossible unless you're, an android or something. But understanding your emotions and acting in a manner that includes them. Listen, to be honest, I swear, I curse, I throw a fit in my trading. It's just my process, right? But I understand my emotions and I have to act in a manner that basically protects myself from myself, right? Does that make sense? Protecting yourself from yourself. I know I'm emotional, right? And I try to do things in my trading that I know that's a weakness. I know that's something I've struggled with. And so I have to find things that circumvent what my vulnerabilities are going to be. So it's not removing emotions from your trading, but understanding the emotions and acting in a manner that includes them. Or in other words, the way that I'm reading this, acting in a manner that if it's an emotional decision or you have other fail-safes involved to protect yourself from your emotions. So anyway, I thought this was important. And I have another one here from Tom Canfield. Please follow Tom at Canny4. Great guy, great trader, been trading a long time. And just kind of love what his posts are. They're kind of funny and snarky, but always helpful. And let's see what Tom has to say today. I would expect much lower volatility today, but maybe not. If the last 2 days caught you with losses, don't try to get that money back today. Let it happen over time, over a series of good trades. You got time. We all got time. No hurry. Listen, there's a lot of words of wisdom here. Yes, of course, if you have a big drawdown or you have a big day down, you want to make it back right away. I know you do. So do I. I want to make it back, but I've been doing this for so long. It never works that way. It never works that way. Just start over, start slow. Like Tom says, don't try to get your money back. Let it happen over time, over a series of good trades, not revenge trades. You have time. We all have time. No hurry. If you've had a loss, don't try to make it back right away. Just trade even better and more disciplined than you have before that. Over time, you'll get it back, but if you try to rush it, it doesn't work. So thank you, Tom Canfield at Canny4. And then also thank you to Rushi Korea at QuantRK. Appreciate both you guys. And I think this was certainly apropos for this current market. All right. Now, talked a little bit before we start getting over to taking a look at what positions or what charts that I'm looking at potentially for next week. Frank is a friend of mine. Follow him at FrancoD. Great poet, great trader, great musician. He was a reporter in the music business, just all around great guy. He used to come every day to my daily live stream. Let's see what his poem is. What a month was April. We're in May now, but April was a month too. What a month was April. The market's harsh and stark. Trades hard to find as stocks wilt in the dark. Rules help immensely, but it still leaves its mark, for sure. Our motor's revved and ready, but the engine is still stuck in park. Isn't that great? What a month was April. The market harsh and stark. Trades hard to find as stocks wilt in the dark. They certainly wilted. Rules help us immensely, but it still leaves its mark. You have to have rules. Even with rules, it's still going to hurt, right? Our motor's revved and ready. We're revved and ready, but the engine is stuck in park. Wait for your signals. Wait for some kind of sign of a reversal in the market. Any of these levels below us, that might be it. You don't know. It may not be it. All you can do is follow your rules. So thank you, Frank. Hope you guys enjoyed that. And let's turn to the chart, shall we? All righty. Apple. Well, Apple is stuck in purgatory, as I like to call it, and like Ava likes to call it. There are two levels here that I'm interested in Apple. I'm interested in Apple at the 200-day moving average. I'm interested in Apple at the 250 or at the 300. Next week, if Apple closes above the 200, I will buy Apple. If I get some kind of close under, close back over, intraday rejection or bounce at the 250, I will also buy Apple there. I really like Apple. I think it's a great stock, long-term stock trade, or the 300. So if it moves higher above the 200, that's my first entry. If it doesn't, comes back down, rejects the 250, that's my next potential option. And here at the 300-day moving average, that would be my next. I had a great trade in Apple, exact same kind of setup back here on the 15th of March, close under, close over 200. Look at that, baby. Just ran nice up, nice run, got to trailing stop level, got up to not quite a 70 RSI, but got above 65 RSI. And then when it closed below the 5 EMA, I got out. So, and I phased out along the way, of course, but I got in roughly somewhere about 155, got out at 174. Now, what is that? 20 points. That's a big move, right? I was risking, I don't know, 7 points, something like that for in the worst case scenario, or, a couple points if it just closed below my end of day stop. So, it doesn't mean this trade, or if we get a trade next week, it's going to work, but it can turn into something like this. So I don't like to give up an opportunity. I'm fine to take a small loss on something if I have the potential for a big gain. So Apple, I'm going to be watching very closely next week. Close back over the 200, some kind of rejection of the 250, or some kind of rejection of the 300. And I do want to say real quick that, in this podcast, I do kind of try to take you through the levels. I'm not trying to teach you lessons. I'm just trying to give you a broad idea of how I trade and the levels that I look at and how I position size. I do teach a one-on-one course in the evening time over Skype. It's a 15-hour course, 5 sessions. Each session is 3 hours. It costs $1,750, but it's a great course. I think the best way to learn anything is one-on-one with an instructor, and that's why I offer courses, one-on-one courses this way. I teach you all 5 of the different trading approaches that I use. So if you're interested, just send me an email. Email's in the link of this YouTube video. Just say, Greg, interested in potentially taking your course. I'll reply back and answer your questions, so forth and so on. But keep that in mind. This podcast here, I'm really not trying to teach you all the nuances, just kind of a high level. Okay. All right. So that's Apple. Apple is very interesting to me. Over the 200, rejection the 250 or the 300. Adobe. All right. So Adobe, we're at a 38.97 RSI. We don't have any of the major moving averages around us. But what I like about this is next week, if we get an under 30 over 30, we're not there yet. So the trigger's not there. But what I like about this right now is we do have a double bottom with the bullish divergence. So what is that? Well, this leg down here, you see the red bars here, how deep they are. Then you see how we got a rally into some green. And now we're lower than we were over here. But you see the very small red bars to the downside. So the price is moving downwards, but the MACD is going upward. That's called a bullish divergence. I learned that from studying one-on-one with Dr. Alexander Elder. But even though we do have a double bottom and a bullish divergence here right now, but I still need the proper trigger. The proper trigger for this trade for me would be if we move back down and got an under 30 over 30. All right. AGQ. All right. Well, AGQ did have a legitimate signal on Friday. You see how we're at 30.04 on the RSI? Well, it did during the day go, it got a 29 handle. So it went under 30 RSI and then closed back over. Now, is that a good risk to reward ratio? It really is. It's 30.04. If it closed at 29.99, I would get out. So I'm risking, I have my 2 ATR emergency stop down here always, but my end of day stop is a very, very, very small risk with the potential of a big move up. I remember my trading partner, Ava, bought AGQ with a under 30 over 30 and just had a huge trade, risking just a little bit for the potential of a big trade, and she got the big trade, and this could be it as well. So this coming week, if we have another under 30 over 30, I would consider buying that. Or if we have a close under, close back over the 30, I would also consider buying that. All right, Boeing. Boeing is 29.88. See the third ATR channel here? See how we finally got above it, held it, held it, held it? It's a good sign. But what is the entry signal? Well, it's 29.88 and under 30 over 30. Well, we're under 30. So Monday, if we closed back above the 30 RSI, that would be a decent entry. We'd also have some kind of V2, a V2 entry trigger as well, which would also help sweeten the deal. But yeah, I like Boeing. I like Boeing. I like how Boeing has held kind of this major level here. I just need it to close above 30 RSI, and that would be a signal. It may close above on Monday. I may buy something else that looks better. I don't know. So when I go through these and I'm telling you about this, if this happens, I would buy. That happens, I would buy. I only buy one trade per day, one swing per day. And it served me well over the years. Can you imagine if on Thursday, on Wednesday, buying 5-6 positions, and then on Thursday with the big market down, you would have just got hammered. Right? And so I like to stagger step into trades. Doesn't matter. Sure, if it kept going up, I wish I would have added 10 positions, of course, right? But I'm always looking at the risk first. So if Boeing does close above 30 RSI next week, I will consider buying it. Cameco, CCJ. All right, and this is uranium. This is a legitimate signal here that happened on Friday. It had an intraday rejection of the 200. It also rejected the negative third ATR channel, and it had an under 30 over 30. That's pretty sweet, right? I decided to go with, what did I buy instead? Oh yeah, I bought Tesla as well. I bought Tesla instead. But next week, if we have another, like Monday, if we had another rejection of the 200, I would definitely consider buying CCJ. Or if it went down, rejected the 250, I would consider that level. If it continues to go down, rejects the 300, I would continue there. I would consider buying that there. All right. Walt Disney. All right. Well, Walt Disney's at 28.77. Boy, Walt Disney, what a fall from grace with this stock. My gosh. But I guess that's a lot of stocks as well, right? So right now it's 28.77. If it were to close above 30 RSI, that would be the entry trigger. It would also get above the negative third ATR channel. That would be entry. The only tricky thing here is that earnings are coming up on the 11th. I don't hold through earnings. You know that. And so Monday, if it closed above, give me, a nice little kind of gentle close above the 30 RSI, give me a good risk reward ratio, I would consider it, but I have to get out of it before earnings. Holding through earnings is a really good way to lose a lot of money because it's really a gamble. If we have earnings, if I don't get the entry signal and we have earnings, and then after the earnings, I get the signal, then I would take it then. Etsy. All right. Well, it's 35.27. Looks like we may have intraday rejected on Friday. We also have a double bottom bullish divergence here, right? Here's the first low, deep red MACD bars. We rally into some green. We come back. Are we lower here than we were here? We definitely are. But look, see the red bars here are not that deep. So this is a double bottom and a bullish divergence. Next week, if I had an under 30 over 30, that would be my entry on Etsy. Facebook. Well, Facebook has been relatively strong here. What I would be looking for on Facebook for next week would be a 520 cross under and then a crossover. Right now, the 5 EMA is 207.76. The 20 EMA is 206.14. So the 5 is above the 20. So you could have taken that with a 520 crossover. You definitely would have been out of the money because this would have happened here. But if we can cross under and then in the future cross back over again, that would be of interest to me for Facebook. Google, we're at a 38.75. Where would my entry be on this one? Well, we're well below the major moving averages of the 200, the 250, the 300. So the only level to the downside would be an intraday rejection of the 30 RSI or a close under, close back over the 30 RSI. So that's what I'd be looking for on Google. JO, which is Joe, which is a coffee ETF. What I'm looking for on Joe next week would be an intraday rejection of the 250, an intraday rejection of the 30 RSI, or intraday rejection of the 300. Qs, well, of course, Qs is the NASDAQ 100. We're at 37.56. What's the entry signal? We're well below the 200, well below the 250, well below the 300. So the only legitimate level for me as far as the Qs would be an under 30 over 30. Under 30 over 30s on indexes are usually a really good risk to reward ratio, right? On an individual stock, maybe not as much, but on a large index like the Qs or IWM or SPY or the diamonds, it's generally a good, historically it's been a good place to buy. You still have to position size correctly. You still have to get out if it closes below, but you can just wait for it to close back above. So next week, we're not really close. We're 37.56, but if we have a close below the 30 RSI, that's where I close under and then close back over, or an intraday rejection, that's where I would get in, especially on something like the Qs. Rio Tinto. So look, we're below the 200-day moving average. If we had a nice little clean break above the 200, not too chasey, I don't want to, if it moved up too strong, then the risk to reward ratio is impacted. But if we had a nice little close back above the 200 on a Rio Tinto that gave me a good risk to reward ratio, that would be my level. SPY, same with Qs. We're not that close. We're 39.01. SPY's been, the strength of SPY has been much stronger than the Qs recently. But next week, if we had an under 30 over 30 on SPY, that would be my entry signal for sure, especially on an index. Tesla, okay, well, as I mentioned, I already did buy Tesla on Friday because of this intraday rejection of the 250. But next week, if I was not in this trade and we closed above the 200, I would take a trade there. If I had if Monday rejected the 250 again, that would be interesting to me. If we head down lower and rejected the 300-day moving average, that would also be of interest to me. Or if we had it under 30 over 30. United Airlines, was really strong, had this close above the 200, moved up nice, consolidated, moved down hard on Thursday and Friday. What level do you think I'm looking at? You're right. I'm looking at the 200-day. That's about the only thing that would be of interest to me. If we had a close under, close back over, or an intraday rejection of the 250, that would be interesting. Real estate has got hammered as everything else has. Look at this move down. Unbelievable. Just want to point out, I was talking about double bottoms, bullish divergences. Well, here is a double top bearish divergence. See the move we have here, the first move, see how tall these green bars are? Then we pull back into red and then we go higher. But the higher move came on smaller green candles or green bars here. So that means that we're running out of sellers into this, running out of buyers into this second move here. And look what happened after that. My gosh. So, this is what I learned from studying with Dr. Alexander Eller, double bottoms, bullish divergences, double tops, bearish divergences. So where are we now after this huge move down? Well, we're at 34.76 RSI. Probably the only one I would be interested in buying here next week would be a under 30 over 30. It's potential I could go with the 300 or the 250 or the 200, but ideally I'd like to go with the under 30 over 30 on real estate. And then last but not least, XLV. This would have been a legitimate entry on Friday, but again, I took another trade. I only take one trade per day. I'm not going to take them all, but look here, we rejected the 300-day moving average. Back here, on the 2nd of May, we had an intraday rejection and it held and held and held and held. Well, actually, it has still held from there, right? That entry has always stayed above the 300. But because I only take one trade per day, where would I be interested? I'd like to see XLV close below the 300 and then close back above. That's really what I'm looking for. You could also go off the 250 or the 200, but that seems a little stretchy into that kind of move there. So ideally for me, an under 300 over 300. So, like I said, I'm trying to give you a high level view of the levels that I look at, how I position size. But, if you really want to learn this the right way, take the course with me. It's one-on-one. It's the best way to learn anything. You can ask any questions you want. I'm extremely patient. It's very important to me that my students succeed. It's important for my brand. It's important because I care about people, right? I want them to be able to make money trading and have a good idea how to do it and all the things you need to set up for the proper trade. So, like I said, the course is $1,750. Just send me an email. Email's in the link of this description. If you do reply and say, "Hey, Greg, I'm interested in your course," I will say, "Great. Thank you for saying hi. I appreciate the email. Let's set up a Skype call." The Skype call is free. I promise you, it is not a sales call. I just want to get to know you a little bit better, talk to you about your trading, what's been going on, how you trade, what your goals are, what your challenges have been. And then it's a really good time for you to ask me any questions about the course, any specific questions. And when we're done with the call, you think about it as long as you want. I will not ask you if you want to take the course. I promise I would never do that to you. Just want to get to know you, answer your questions, and then you can think about it as long as you want. And then one day, if you decide, "Hey, today's the day, I do want to take Greg's course," just reach back out to me and say, "Greg, I'm ready. Let's go." And we'll get it scheduled and away we'll go. And I'll teach you everything that I've learned. It's well worth the money. It's worth every single penny of the $1,750. You're going to learn a lot. You're going to make a friend in me as well. And there's some other perks as well. So if you're interested, just send me an email, get the ball rolling. Secondly, if you like online courses, I have a really good course online at udemy.com where I teach you the deep dip buy trading strategy. Most of these trades here with the market as it is a deep dip buy strategy. So it's a perfect time to do it. And the great thing about that course is I teach you step by step. It's not one-on-one, you and I. It's a video, but it's step by step. I show you all sorts of examples. We go through all sorts of simulation trades, teach you about the position sizing, the emergency stops, the end-of-day stops, the trailing stop levels, how to do that, teach you everything. And it's on udemy.com. It's like $12 or $15. Pretty inexpensive for what you get. You get 9.5 hours of video. You get 26 videos total. You get 15 study guides. And I've gotten so many good reviews and feedback on that course from around the world. So if you're interested, the link to Udemy is in the description. And then lastly, if you wouldn't mind, if you found some value in this podcast, if you could just hit the thumbs up button, it helps YouTube know that there's some valuable content there so they can get it out and share it. There's a lot of people that need help with trading, everyone. A lot of people, right? Especially in this market. And so hopefully if they see this podcast, it will be helpful to them. So if you wouldn't mind hitting the thumbs up button, sharing it on social media would be great as well. And I would really appreciate it. And then lastly, I always like to leave off, but try to go out and do something nice for someone today. Just a smile, a wave, hold the door open, just anything to help them. It will improve their day. And I think if everyone did one nice thing for another human being each day, it would make the world a better place. And then also I'm a big animal lover. And so if I could be so bold to ask, if you could go out and try to do one nice thing for an animal today, that would be twice as good, right? And hopefully maybe one day when you need it, someone will be there with a kind word or a helping hand. All right. So I hope you have a good weekend. I appreciate you coming here. Be good, be safe, drive safe. Please, next week, be careful, position size correctly, be picky with your entries. And, if you have any comments or questions, put them down in the comment section. I'll do my very best to get to them. But I appreciate you investing the time here. Hope it's helpful. And I hope we all have a good week next week. The bulls could use a little wind in our sails, right? So anyway, thanks again. Appreciate it. And hope to see you for next week's podcast as well. All right. On the way out, I have to run the U.S. legal disclaimer. Have a good one, everyone. Take care and have a really nice weekend. Rest of your weekend. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.